What did I do to grow my real estate portfolio? Well, first and foremost, I approached it with a sense of exponential growth. So what I mean by that is that most people, human beings naturally and psychologically think that growth is very linear. So if I take a step today, I can take a step tomorrow and I can take a step the day after that, but they're all very equal steps in nature, but I'm getting closer towards my goal. But in reality, that's not really how growth works. Growth tends to be more exponential. So if I take a step today, it means that then I can take a much larger step tomorrow and I can take a much larger step than that the day after. And what happens is it's very much like a domino effect. So each domino that pushes over the next domino can actually get larger in size because of all of the weight and the momentum and the inertia that has been contributed prior to that point. And so when I think about that in the real estate sense, I mean, you can't get too carried away with the current deal. If it's your first deal, if it's your second deal, you can't be comparing that to somebody else's 10th deal because their 10th deal is more likely to be 10 times or even 100 times or 50 times or 25 times larger than the deal that you're currently working on. So if I look at that in terms of my own journey, back in 2013, I was working on a very small little granny flat relocation up at a caravan park in Bonnie Doon, which was like a $55,000 cost deal. But then we've just gone and finished off, a 7-story commercial semi-civic office building in East Melbourne, right on the MCG, only last month, right? That project was probably 1,000 times bigger than the one that I was doing 10 years ago. And so you've got to approach your investing as exponential growth. So what you're working on today won't be what you're working on tomorrow. What you're working on tomorrow and the day after that will be far greater in size and volume and profitability.